Libtards and gentlemen, this is a response to the very poor Bush, America, our stock market, and our economy video. At the 2-minute 7-second mark, this moron says, President Bill Clinton took the stock market up. I think this tells us a lot about his political ideology. He believes that government, specifically the president, can take the stock market up. Yes, he can make reforms, we'll get into this shortly, that make it easier on investors, but he acts as if the president is God. The president is not God. The president is merely one cog in a large machine. Excuse me for a second, gotta take a drag off this nice stogie. Blow some smoke in the face of the liberals out there. The backbone of this country is entrepreneurs who risk their money in capital ventures, investors, and small business. It's the job of the president to make it as easy as possible for them. In short, just get out of their way. At 2:12, he says, going off of his President Clinton took the stock market up from 3,300 to 10,700. Not entirely correct. Let's look at some timelines. The Dow closed at 3,241.95 on January 20th, 1993. That was the day Bill Clinton was inaugurated. The Dow closed at 3,867.41 on January 6th, 1995. That's a 19.3% increase. And that is critical because that was the day the GOP took over Congress. The Dow closed at 3,867.41 again on January 6, 1995, and on January 6, 1997, it closed at 6,567.18. That's a 69.8% increase. This user also missed, or dare I say purposely omitted, some important technological innovations that came about shortly after Clinton assumed office. The bull market took off precisely when then-Fed Chairman Alan Greenspan took his foot off the brakes and hit the gas in 1995, and when the Republicans took control of Congress, further blunting the effects of the Clinton tax torpedo that had taken effect the previous year. Clinton also benefited from innovations long in the making, including the Pentium chip released in March of 1993 and Microsoft's Windows program released in August of 1995. Clinton's deficit reduction plan didn't create the surpluses at all. They were a direct result, you can also factor in he didn't spend like a crazy man. They were a direct result of a tidal wave of capital gains revenues generated by the GOP-led stock boom. In 1993, he forecasted a budget deficit of $202 billion in fiscal year 2000, but the Treasury produced a record surplus of $236 billion. That's a swing of more than $400 billion. People like Bill Gates have done more to further economic growth than any blowhard politician in Washington ever has. And of course, Clinton, in 1997, lowered the capital gains rate from 28 to 20%. The Dow closed at 7,965.04 on January 2nd, 1998, and the Dow closed at 9,643.32 on January 8th, 1999, a 21% increase. The Dow closed at 9,643.32 on January 8th, 99, and it closed at 11,522.56 on January 7th, 2000, a 19.4% increase. So you can see the increases were much larger after the GOP took over Congress. The Dow closed at 11,522.56 on January 7th again, and it closed at 10,587.59 on January 19th, 2001. The tech boom had petered out. Those stocks were overpriced. It got as high as 11,722.98 on January 14th, 2000, and there was a 19.1% decrease to the period ending April 3rd, 2001. This is called a market correction. I don't blame Clinton for the Dow slide in 2000 to early 2001. And again, the Dow closed at 9,485.71 on April 3rd, 2001. The first quarter of 2001 featured negative GDP growth, certainly not the fault of Bush. We were still under the last Clinton budget benchmarks. The third quarter of 2000 was also in the negative. We didn't have a recession, but it was the economy was not improving. This user then says at the 2-minute 20-second mark, the stock market has gone up since 1932. Do you call the following figures up? Let's look at the Carter administration, which featured large Democrat majorities. Carter started his Congress with 61 Democrat senators and 1 Democrat voting independent, and large majorities in the House, and his entire 4 years of office was a disaster and had large Democrat majorities in Congress. So let's look at this. On January 19th, 1977, the day before Jimmy Carter was inaugurated, the Dow closed at 968.67. His last full day in office, January 19th, 1981, the Dow closed at 970.99. Do you call that up? Well, I guess it was about 2 points up. Over 4 years, Jimmy Carter, it was flat. 1980 had negative GDP growth, unemployment started climbing, inflation started climbing. It was a disaster. Reagan takes over. The Dow closed at 1,027.04 on January 3rd, 1983, after his first round of tax cuts takes effect, including a reduction in the capital gains tax to 20% from 25%. Then the Dow closed at 2,239.11 on January 19th, 1989, Reagan's last full day in office. That was a 118% increase. Then at 5:50, this user plugs his often repeated and often corrected argument that Bush was behind the rise in oil. Again, I've corrected that in other videos. See our video responses playlist. We'll have all the relevant links on the right side too. He also never cites where he allegedly made these predictions, so we'll take that with a mountain of salt. And as per usual, at the end of his video, he throws out a plethora of other topics with a technique I like to call throw the elephant. He attempts to toss out several other topics just in case the crux of his presentation, and I use the term presentation loosely, doesn't work. Same garbage, different wrapper. Lastly, he's still plugging the Bush stole the election canard. On the screen, we'll have Dave Chappelle's article debunking this user's recycling of Michael Morwellian arguments. So as you can see, he left a whole bunch of information out. Again, it's very generalized, and I assume he's probably trying to appeal to the ignorant masses with that. So it's very generalized and very sloppy. Hopefully this helps correct several of his misconceptions. Have a nice day, and don't thank us now.